Hey, what's up, stock compounders? Brad here. So, I have an exciting episode for you today. I've talked a lot about the magic formula investing strategy and little tweaks that I'd make to it to hopefully improve it. And today, I'm going to put my money where my mouth is. I'm actually going to start a magic formula investing portfolio. Okay. So, I want to kind of walk you through how I'm deciding which magic formula stocks to buy, and then tomorrow, I'm actually going to put $100 into each of five Magic Formula stocks. And I'm going to be tracking over time how this portfolio is performing compared to the S&P 500 index. So let's jump right in. So this is the website Magic Formula Investing. This is where you can get the Magic Formula screen results. So I'm going to search. I'm going to leave it as a 50 million minimum market cap, and I'm going to get 50 stock results. So let's do that right now. Okay. So these are the best combination of kind of cheap and good, as shown by the Magic Formula stock screener. So what I did today is I copied all of these tickers. There's 50 stock tickers here, okay? And I put them into a spreadsheet. Now, I also included the market cap because I want to have a sense for whether the company is really big or whether it's really small, or just what the general size of the company is, to look for correlations in terms of market cap and future returns. So I have that information. I listed the price from today, June 29th, for each of these stocks. Now, these next columns are where I start to narrow down the list from 50 down to five. I really only want five Magic Formula stocks. And the idea there is to buy five each quarter. So buy five tomorrow, and then 3 months later, I'm going to do the same thing and pick another five, and so on. Now, this first kind of filter that I ran these stocks through is, does it have a write-up in Value Investors Club? Okay. Now, if you're not familiar with Value Investors Club, it's this site here, also created by Joel Greenblatt, and it's a place where great investors submit stock ideas, and then Joel and his team looks at the write-up and decides, okay, is this a high enough quality write-up to be included in the Value Investors Club? So if it passes that high bar, it shows up here, and we can search, by stock ticker symbol right here. So for example, let's look at CI. CI is not okay, Cigna is CI. So we can see there was a write-up from March of 2019. So that's what I did here. If there was a write-up within the last 5 years, I put the month and the year of the write-up in this column, okay? So that was kind of the first filter. I only want to look at stocks where, there's already been a good investor who sees potential in that stock, okay? Now the next column is super investors. How many super investors own this stock, okay? So if you go to Dataroma is a website, aggregates kind of the current portfolio holdings of super investors. You can see which investors are included down here. But let's look at CI. So I want to see how many super investors own Cigna Corporation. And you can see here there's 4 investors that own Cigna. And then down here you can see which investors they are and what percentage of the portfolio Cigna makes up. And I used this kind of data as well. So the super investor who owns the most of it, what percentage is it of their portfolio? So this was 12.45. So you can see here, I just took that investor who has, the company makes up more of their portfolio than the other investors who own it, and I just put that percentage here. This really gives you a sense for, how high of a conviction bet is this stock for that particular investor. I didn't actually use the allocation data to narrow down my list. I just thought it was interesting. And, going forward, as I get the results of how these stocks perform, I can see if there's any correlation between how much was allocated and what the performance is. So it's just another data point for me to be able to see if there's correlations to potentially improve my selection process over time. So, following basically these two first metrics, did it have a Value Investors Club write up, and does a super investor own it? For companies, well, I should say 20 of the 50 stocks were owned by super investors, okay? At least one super investor. Now, when I narrowed it down to, all right, it's owned by a super investor and it has a Value Investors Club write up within the last 3 years. That's the cutoff I'm using, 3 years. So there were 11 stocks that both had a Value Investors Club write up within the last 3 years and was owned by a super investor. And you can see those are bolded and shaded blue over here. So Value Investors Club write-up owned by a super investor. Now I wanted one more kind of filter to narrow it down from 11 to 5. And this is a filter I got from the book 100 Baggers by Chris Meyer. I've talked about this book before. And he does a study of stocks that returned 100 to 1 in the stock market. I think it was over a period of like the last 50 years. And there were 365 stocks that were 100 baggers over that 50-year period. And one of the most important, most instructive, most highly correlated metrics for whether or not a stock becomes a 100 bagger is, is it run by an owner operator? Does the management team of the company have skin in the game? Do they have how much equity do they own? Because if you have a management team who has a lot of skin in the game, who also benefits by the stock price rising, then it's just a lot better for equity holders if you kind of have the same incentives as the management team. The financial incentives are aligned. So what I did with this last column is I went to Guru Focus and I looked at inside ownership, okay? And I listed the percentage. This is, what percentage of the shares outstanding are owned by people who work for the company, primarily the management team. So you can see insider ownership. I've listed for these 11 who fit both of the Super Investor and Value Investors Club columns. So, and then I just took the top 5. Which 5 of those stocks had the highest insider ownership? And I bolded those here. So you can see, we've got Diska, MCK, McKesson, MSGN, Mastercraft, UIS, which is Unisys, I believe, and Garrett Technology. So tomorrow, I'm going to be buying $100 each of those 5 stocks. And I can do that through Robinhood with fractional shares. So, I can spend exactly $100 on each of these stocks. So in the case of Discovery, I'll have like 4.7 shares of Discovery. And I'll update this price tomorrow when I buy so that, as I track price moving forward, I'll have the actual price that I bought it at. And of course, I will link to this spreadsheet in the description tomorrow once I kind of have the final numbers here for this first round of buying. Yeah, and then one other thing, I'm going to put $100 into each of these 5, and I'm also going to put $100 into ticker VOO, which is an ETF that tracks the S&P 500 index. because I really want to be able to compare the results I'm getting here with this mechanical magic formula investing strategy with how I would have done if I had just been putting money into kind of a passive approach like the S&P 500 index. I want to be able to compare those in real time. So 500 into stocks every 3 months, 5 different stocks, 100 each, and then an additional 100 into the S&P 500 index. Now the twist, I mentioned there was a twist in the title of this video. Now the magic formula instructs us to sell these stocks after holding for a year. Okay, there's a little twist even more on that in the book. It's if you lose money on a stock, sell it just before a year, because then you can do tax loss harvesting. Okay, which helps you save a little money on taxes. And if there's a gain on it, sell it a day after a year. Now you're only supposed to sell it if it's no longer showing up after a year in the magic formula screen. Okay, if it's there, you just hold on to it for another year. Okay, so the twist is I think I want to hold these companies for longer than a year. Okay, a year is actually a very short time to kind of manifest or to realize the benefits of buying a cheap, good company. A year is very short in terms of a business cycle. Okay, so I think what I want to do is I want to hold longer than a year, but the question is, how do I know when to sell? And the way I'm going to do that is, so each of these stocks that I'm buying has a super investor who has it as a larger portion of their portfolio than the other super investors. So let's look at Disca. I want to give you guys an example here. So Disca, Discovery Communications. So Michael Burry, we all know him from The Big Short, just bought quite a bit of Discovery. Okay, it's almost 9% of his portfolio right now. He bought 350,000 shares. So essentially my strategy for knowing when to sell Discovery is I'm going to wait until it's publicly known that Michael Burry has sold Discovery. Okay, because say Discovery is a great company. Say it's a long-term compounder, right? If I hold it for a year, I'm only going to actualize in my portfolio a small portion of the benefits of owning this company over the long term. I really want to park my money with these 100 baggers, stocks that are going to compound returns over decades. So the way that I see to do that, kind of the intelligent way I see to do that, and this isn't my idea, it's an idea I've heard from other great investors, is kind of copy the timing of what great investors are doing. Let them decide when a good time to get out of the stock is, when that value has kind of been fully realized and the compounding engine is running out. It's running low on steam. So I'm going to keep an eye on every quarter. I'm going to see, okay, does Michael Burry still own this stock, or has he parted ways with it? And if it's been longer than a year and he's parted ways with the stock, that's a good indication to me that it's a good time for me to sell the stock as well. So that's what my selling approach is going to be. And that's a big twist on the magic formula investing strategy, which tries to make it as simple as possible. You're just holding for a year unless the stock is still in the screener. So I'm kind of adding another layer on top of the strategy for selling by kind of copying these super investors, selling when they sell. So anyway, guys, I think that's all I wanted to share for today. um, yeah, I'm excited to start collecting data on the Magic Formula portfolio. I think there's a ton of potential here to really trounce the S&P 500, and I'm excited to see what my returns actually are after a couple of years. It takes probably 3 to 5 years at least to really start seeing the benefits of using an approach like this. So I'm in it for the long haul. Of course, I'm going to do quarterly updates to let you guys know what's happening with my portfolio. And if you guys have any questions at all about implementing the Magic Formula portfolio, I might not have all the answers, but I'm happy to answer what I can. And there's a lot of smart people in the comments as well who can help you out with questions that you have about the Magic Formula investing approach. So that's all I got, guys. I will see you in the next video. Take care.